Okay, I believe everyone can hear me. So what we want to do is maybe for 5 to 10 minutes, I just want to just highlight a couple of points. I think most of these things I've talked about them in our last communication that we did in January, but just to emphasize a little bit more so that it's clear to everyone, I will just repeat it. And then after 10 minutes, we can start with management accounting, the reason why we are here today. All right. So welcome again to your second year at Mancosa. My name is James from Varsity Unlimited Tutors. I'm a private tutor. I'm sure most of you we talked in January. Last year. Sorry, in 2023 when we were doing our first year. Right. So I'm just going to highlight how we can assist you and going to highlight what you can expect within your second year so that you are better prepared. Right. So for your second year, the webinars, the Mancosa lecturers, they are going to start around the 2nd of March. So that is about 4 weeks from today. That is about the 2nd of March. Then they're going to start on their lectures. Then your assignments are going to be due from 8 April. That's when your assignments are going to be due, right? And then your exams are going to be due in June. Then that's when you're going to be writing your exams. Now, in terms of the assessment that you're going to expect at this semester, you're going to have 3 assessments, right? Your formative assessment number 1, which is your KCQ, just like you were doing in your first year. Then your formative assessment number 2, which is a case study or an essay question, which is different from what you were doing in your first year. So this is an essay question. Usually the lecturer will ask you to present about 2,000 words in an essay format where you are presenting it using Harvard referencing. So you're expected to do some academic referencing, some research, some academic referencing, paraphrasing, etc., so that you can avoid plagiarism. Right, so that will be your second assignment, right? And then lastly, your exam at the end of the semester. So those will be your 3 assessments. Your KCQ, just like your first year, your essay question, which is a bit different, and then your case study exam at the end of the semester. So those are the 3 assessments that you're going to that you're going to expect. Now, just like we did in our first year, we can still assist you as a student in order for you to get a better marks. Or if maybe you are working also and you're struggling with your studies, we can help you as Varsity Unlimited Tutors. So it's me and my team, right? So the way we are going to assist you is most of you, I can say almost 80% of you are doing one specific module altogether, which is a management accounting. Right, combined, everyone is doing management accounting. Almost everyone, not everyone, but almost everyone is doing management accounting. So we are going to have weekly lessons every Thursday for management accounting that we are going to have. Just like we did when we were our first year, we're going to have weekly lessons for management accounting, and it's going to be 800 Rand. So this includes the answers, the solutions to the KCQ, the solutions to the case study, and then preparation for exams where we do past exam papers, just like we're doing when we're doing financial reporting and analysis, right? So that's for management accounting, right? Then for other modules other than management accounting, there are some modules that we can assist with. There are some modules that we might not be able to do any lessons for. So what we have done in order to cover as many people as possible is we have a package that goes for 700 Rand a module. So within that package, you are going to get solutions for your KCQ. You're going to get sample solutions, like a guideline where we go through the assignment together, the essay. We teach you how to write the essay, what you should include in your essay, and then you go and type yourself. But we show you what the answers are supposed to be together as a team setup. I'll do another example, maybe next week or so, where I can do a different case study with you guys so that you can just see what I'm talking about. Then in addition to that, towards the exams, we will have some live lectures to prepare you for the exams, but that will be in May. In May and June, we'll have live lectures to prepare you for the exams. But between now and that May or June, we will be sending you recorded videos on different topics. So if, for example, if you're doing organizational behavior, right, we'll send you a topic that is talking about motivation, right? already recorded. We've gone through the notes and etc. And then you can watch that recording in your spare time. It's because we won't be able to do live lectures for each and every module. It will be practically impossible for us to do so. So we are going to do pre-recorded lessons and pre-recorded exam preparation videos to help you. But during May and June, we'll do some live lectures for each and every module that we've covered to help you prepare for the what? For the exam. So in terms of what we are covering, for those that are doing BBA, Business Administration, all of your 4 modules are going to be covered. For those that are doing project management, all of your 4 modules are going to be covered. For those that are doing accounting, all of your 4 modules are going to be covered. For those that are doing BCom in financial management, all your 4 modules are going to be covered. For those that are doing a BCom in IT management, all your 4 modules are going to be covered. But if you are doing any other degree other than the ones that I have highlighted, for example, you're doing human resources management, public admin, digital marketing, entrepreneurship, and etc. Yes, we are still going to be assisting you. It will just be a different setup. So for those guys, usually I would prefer to speak with you guys on a one-on-one basis. Just give me a call, and maybe you can call me tomorrow and then we can discuss further so that it's very clear how the assistance is going to be, because it's a little bit different for the guys that are doing these modules. Right. But if you are doing any one of the modules that we highlighted, like management accounting, business law, organizational leadership, and etc., those modules are covered during these classes. But just give me a call. If you see that your modules are not listed here, you give me a call and then we can talk in detail. Right? So in terms of assisting you, that's how we will be assisting you. Now that I'm done with that, I want to go and start talking about management accounting, which is what I'm going to be tutoring. But before I start talking about management accounting, in case someone has got a burning question that they need me to address, then please go ahead and ask. But like I said, if your modules are not listed here, you can call me tomorrow in the morning and then we can discuss at length so that we can move forward. But if you have a burning question, you are free to ask the question right now before I proceed with the management accounting lecture. Okay, if there are no questions, that's good. Then for those that are doing business law, we are meeting at 8 for business law, about an hour from now, for those that are doing business law. All right, so let's start. Management accounting. All right. So in your second year, okay, let me remove my video here so that I don't eat up too much of your data. So in your second year, in your first year, I introduced you guys to financial reporting and analysis, right? We talked about financial reporting and analysis in your first year, right? So financial reporting and analysis, if you still remember the slides that we did, I told you guys that accounting is divided into 2. It's divided into financial accounting and management accounting. And we said financial accounting is about reporting what has already happened in the company. It is about looking backwards. It is about factual things, right? But then I said management accounting is about decision making. So this course is about how to make decisions within a company. So when we finish or complete this course, you should be able to take financial data and make decisions for your organization. Now, in order for you to make these decisions, right, there are certain assumptions that we are going to have to make, right? So these assumptions do not apply to all organizations, but they're still applicable to most organizations. For example, we are going to assume that maybe you are a manufacturing company. You will see most of the stuff that we refer to will be more practical to manufacturing companies, although they are still relevant, even if you are not a manufacturing company. But we are going to refer a lot to manufacturing companies as they've got much more detailed costs. So for you to know more about management accounting, you need to have an understanding of the different costs that an organization makes. So an organization, for it to be profitable, remember, profit is what? Is revenue less cost. That's profit. If you make a revenue of 100 Rand and your cost was 70 Rand, your profit is 30 Rand. So profit is always revenue minus the cost that has been faced by the organization, which means that for you to be able to make decisions about the future of the organization, you need to know about the different types of costs that an organization faces. So once you know that, then you can make certain decisions. So you will notice our unit number 2, unit number 3, unit number 4, unit number 5, we'll be talking a lot about the costs that the organization is facing and the decisions that surround the costs of this organization. Once we have a clear understanding of the costs, then we will now start bringing in the sales. We'll start bringing in the price of the product and bringing in the volume. How much did we sell? And that will become now cost volume profit analysis, where we are now saying, if I change the price, what will happen to my profit? If I introduce advertising, what will happen to my what? To my profit? Now we are actually making dynamic decisions that you see that are made by financial managers and general managers on a day-to-day basis. Then once we have completed that part, then we will now start looking at budgets, right? We're now looking at the what? At the financial manager at the beginning of the year, who's now thinking, will we make profit during this year? Do we need to raise more money for the organization during this year? What can we do to increase the profitability of the organization? We're now looking at our cash budgeting. We're now looking at our production budgets. We are also now looking at our capital budget, right? The budget to raise funds for the what? For the organization at the what? At the end of the day, right? And then lastly, there's a topic that we'll do that is called standard costing. I don't want to introduce it right now. We'll talk about it when we get there, right? But standard costing is just basically the issue of how do we cost for the things that we have as what? As an organization. How should we price them at the end of the what? At the end of the day. So that will be management accounting for you for the rest of the semester, right? So for today, with the time that we have available, I think we've got about 40 minutes left. I just want to introduce maybe unit number 1 and a little bit of unit number 2, so that we just get our bearings in terms of what we are doing in management accounting, right? So what is management accounting? So these definitions, we've already looked at them a little bit when we're doing our financial reporting and analysis, but I'll just repeat them for the sake of those that have forgotten what we were talking about, right? So management accounting, again, just like accounting, we are talking about the identification, right, of financial information, right? But now instead of processing, remember in accounting, we talked about identifying, processing, and what? Communicating. But now we're saying that you identify financial information, you analyze the financial information, right? You see the different changes that are happening to the financial information. Then you interpret. You don't just analyze, you interpret. Interpreting is, we are saying, you are packaging the information. If it is going to the management, you are packaging it for the management. If it is going to the employees, you are packaging it for the employees so that the information can be understood by the person that is supposed to receive of that information. Then lastly, you communicate the information. But the reason for all of this is so that we can plan and control, or in short, we can make decisions. Decision making is planning. Decision making is controlling. When we are talking about planning, we are talking about the future of the organization. What can we do today for the organization to be successful tomorrow? That is planning. Then when we're talking about controlling, we are talking about the events that have already happened, right? We are saying, we have seen that the organization is not matching what we planned. What can we do to realign the organization back to what we planned? If I had said my budget for the stock or for the inventory is 100,000, and I see that the current expenditure is already 110,000, what control measures can I put in place for me to safeguard so that I do not over exceed the budget that I have set for my organization, right? So that's what management accounting is, what is all about, right? Then you as a student, you should be able to differentiate between management accounting and financial accounting. I'm not going to go deep into this because we did this when we did financial reporting and analysis, right? So I would say, please, when I've already sent these notes. If I didn't, you can remind me, I'll send them again. Please find time to go through this slide. It's very, very important. But we did this when we did financial reporting and analysis. But in short, the difference between the two is management accounting is about decision making. So when something is about decision making, it means that the whole of management accounting focuses on the managers. Management accounting is not done for the shareholders of the business. It is not done for the bankers, right? It is not done for the government. It is done entirely for the managers. The reports that are created by a management accountant only go to internal people within the organization, which are the managers of the organization, right? So it's prepared with specific people in mind. You do not follow like a GAAP or IFRS or some standards that are international when you are preparing management accounting reports. You just agree within your company that we want our reports to be this way, and that is the way they are prepared, which is different from financial accounting, where you have to follow accounting standards, accounting concepts, the FRAS rules. You need a chartered accountant to come and do it and whatnot. It's completely different from that. Right. So because they are for internal users and you don't have to follow any specific format, you will find that usually they are very unique reports, and they are usually done for smaller periods of time. Management accounting reports can be done on a weekly basis or on a monthly basis or a semi-annual basis, whereas financial accounting is done on an annual basis for the organization. And because they are done for internal people, they are not objective. We don't care. We just put the information the way that we think people will understand it internally. So it might not be as objective as you would want a report to be at the end of the day. So those are some of the key differences. But I would encourage you to go through the slides, right? Or just revisit it from the accounting perspective that we looked about in our FRA. Right. So again, in our management accounting, we will still talk about our assets, our liabilities, our equity, expenses, and our income. But these things, we've done them before, so I'm not going to repeat them again, because we already know what assets are, we already know what liabilities are, we already know what expenses and what income is, right? But in short, remember what I said, profit is always the revenue, which is the income, less the expenses. That's what we are going to focus most of our issues on, right? Right. Then some of these things just theory, which I encourage you to read in your study guide. I don't really want to focus too much of my time on it. But when you're doing management accounting, there are certain requirements in terms of how can we ensure that we are effective in our management accounting reports. One of the key requirements is collaboration and cooperation between departments. So remember, we said that this is an internal report. So if you're preparing an internal report, you have to make sure that there is collaboration between the production team and the inventory management team and the sales team to provide you with the information that you need, and for them to highlight the key metrics that they think are important for their department, so that you can include them within your reports at the end of the day, right? But because these reports are internal, you will find that there are certain limitations of management accounting. So number one, because it's not objective, it's not an exact science. There are no standards for creating management accounting reports. You will notice that we make use of a lot of assumptions and make use of a lot of judgments. So because of that, they might not necessarily be accurate. Yes, we use them to make decisions, but they might not necessarily be accurate at the end of the day, right? Then management accounting in itself does not solve financial problems for you. There are other tools that you can use. For example, decision-making trees, right? We will not find them in management accounting, but they are so much more useful in making decisions, right? Or even issues of using Excel and etc. Information technology management tools. You can make use of them, and they might be better at helping you solve your financial problems than management accounting. But this should give you the basis of decision making, and then you can add other tools such as decision-making trees, ICT tools, and etc., that you can also add on to your management accounting tools that we are going to teach you. So that's unit number 1. Like I said, it's just theory. You can read through it and understand it better, but it's just theory. In your exam, you will not find questions on unit number 1 because it is just basically theory. But you might find some questions maybe in your quiz, your KCQ, that refer back to what? To unit number 1. So now let's go to the important part, which is unit number 2, which I hope that we can finish this one today. Right? So, like I said, under management accounting, we are going to talk a lot about costs, right? So we're going to talk about costs, different types of costs, and then we're going to talk about costs of materials in an organization, and then we're going to talk about costs of labor in an organization, and then we're going to talk about overhead costs in an organization, right? So those are the key costs that we want to discuss, right? But before we go deeper into those costs, what is a cost? And how do we differentiate between the different costs? So a cost is just basically an expense. So remember, assets, liabilities, equity, income, and expense. So when we're talking about costs, you are essentially talking about expenses. We're essentially saying that the resources that you use as an organization in order for you to produce, that's what we are talking about. If you are in the business of manufacturing furniture, right? If you use wood within your business to manufacture furniture, then that is a cost to the business. If you use employees that you have to pay wages and salaries in that business, then that's part of your costs. So that's what a cost basically is, the different things that you make use of. So some of those costs can also be overheads. They might not be direct, right? So for example, the property that you are using to manufacture, right? It has got electricity and etc., but you also pay rentals. So that's still a cost that you face as as an organization, right? So it is important for you to understand the behavior of cost or the different types of costs that you have in an organization. So there are 3 things or 3 ways that we can categorize cost in an organization. We can categorize cost by type, whether a cost is a direct cost or an indirect cost. We can categorize cost by behavior, whether it is a fixed cost or a variable cost, or we can categorize it by location, right? So when we're saying about location, we're saying where is the cost located within the organization, right? Is it located within the factory or it's not even part of the factory? Is it, or if we're talking about behavior, we are saying that if sales increase, does the cost increase? Or does it decrease or something like that? That's what we are talking about. So let's get a little bit into detail. Right. So some of these notes are directly from a study guide, and then I added a few extra things, right? So first thing, let's talk about direct versus indirect cost, right? So if you are manufacturing shoes, right, you are in the business of manufacturing a shoe, right? There are costs that are tied directly to the shoe. You can actually say this is part of the shoe that I was manufacturing, right? This is part. They are tied exactly. You can attribute it and say, if this thing was not there, we could not have manufactured this shoe, right? But there are costs that are not attributable directly to the manufacturing of that shoe, right? But they still help you in the manufacturing of a specific thing. So for example, leather. If you're manufacturing a shoe, you are going to need leather, right? If without leather, you will not be able to manufacture the shoe. So you are going to need leather in manufacturing the shoe. So that is a direct cost to the manufacturing of a shoe. Number 2, you are going to need a cobbler, someone who is doing the actual manufacturing, who is sewing the shoe, right? So that is a direct cost in the manufacturing of the shoe. You can say this person made the shoe. This leather was part of the shoe at the end of the day. Then you might also need maybe plastic, maybe the heels, maybe they're made of plastic, right? Or rubber, if they're made of rubber. So that's part of a direct cost to to the manufacture of the shoe. So materials that go into the shoe, we call them direct materials, right? Labor that goes into the manufacture of that, we call it direct labor, right? So those are direct costs, right? But there are certain costs that cannot really be directly attributable to the manufacturing of something. So if we go back to the shoe, right? Let's assume that you as an organization, right, you don't only manufacture shoes, right? You manufacture shoes, you manufacture clothes and all of these different things. And you have got a factory where you're manufacturing the shoes. And then in addition to the factory, you've got some offices where you are what? Where you have got your receptionist, your managers at the office and etc. You've got your sales people there, people that are doing your advertising for you and etc. Right? You cannot come to me and say this shoe, this person who does the adverts for us, they contributed R2 to this shoe. You cannot really tie it back to the shoe. Why? Because the work that they are doing can be added to the shoe, can be added to the clothes, can be added to all of the different products that you have what? That you have manufactured as an organization, but cannot essentially be tied back to the shoe that you have as an organization, that you have manufactured. So because of that, you consider it to be an indirect cost. It is a cost, yes, but it is indirect for the what? For the manufacture of that particular what? For the manufacture and provision of that particular product that your organization has at the what? At the end of the day. So that's the difference between direct costs and indirect costs. So you've got direct materials and indirect materials. You've got direct labor and indirect labor within the what? Within that specific organization. I hope this is clear. If it's not clear, you can ask a question before I go forward. All right. So I have an example here that we can do together quickly. So Coca-Cola company that is in Eswatini, right? It manufactures Fanta, which is a carbonated drink. I'm sure all of you know Fanta. It also manufactures Valkyrie, which is a bottled water, right? And then the finance manager is now asked you a question, right? Can you please tell me the direct costs and the indirect costs that are related to the production of Fanta? Tell me the direct costs and the indirect costs that are related to the production of Fanta. Right. So what do you guys think? Carbonated syrup. Is it part of the direct and indirect costs related to Fanta? And is it direct or indirect? Carbonated syrup. What do you guys think? Okay. She says it's a direct cost. That is very, very correct, right? It's a direct cost found within the what? Within the production of Fanta, right? What about sugar? Is it a direct cost, indirect cost? It's not even part of Fanta. What do you guys think? Direct cost. That is very, very what? That is very, very correct. What about the rent for the factory? Is it a direct cost, indirect cost in the production of Fanta? What do you guys think? The rent of the factory. I see a lot of people are saying indirect. That is very, very correct because you cannot attribute it to Fanta only. Because remember, they are producing Fanta and they are producing Valkyrie water, purified water. So that's an indirect cost. So you cannot attribute it as a what? As a direct cost at the what? At the end of the day. So I encourage you, go through all of these things here. And then you can see whether it's a direct cost or indirect cost as part of your what? As part of your homework. Unless if someone can see something there that they think is going to be problematic, you can highlight it to me and then I can explain it. But in your spare time, go through all of these and allocate them between direct or indirect or even not even part of Fanta at the end of the what? At the end of the day. But if you see something that is critical there that is saying, oh, James, that one, I don't think I'll win on that one, you can highlight it to me right now and then I can explain. So we are done with direct versus indirect costs, classification of costs by type, right? So that's your homework there. Right, let's go to the next one. classification of costs by behavior. Right? So when we are talking about behavior, we are saying that as the organization grows, or as the organization sells more of its product or produces more of its product, costs behave differently. Some costs will remain the same, some costs will change. So for example, let's go back to Fanta, right? If you manufacture 1,000 bottles of Fanta, right? The rent that you're going to pay for the factory, probably 20,000 rand. If you manufacture 1,500 bottles of Fanta, you are still paying the same rental. So you can see the behavior of that cost is that it is fixed regardless of the number of items that you have produced. But let's talk about sugar. If you manufacture 1,000 bottles of Fanta, probably you use 20 kgs of sugar. But if you manufacture 1,500 bottles of Fanta, probably you now use 30 kgs of sugar. So you're now saying that the amount of sugar you use is relative to the output or the quantity produced, which means that it is variable or it changes with the output. So that's what we are talking about. So fixed costs are costs that do not change irrespective of the level of output or activity within the within the company, right? Then variable costs are those costs that are relative. As your costs increase or decrease, they actually they actually change with output at the end of the day, right? This one is very straightforward, right? Again, I've given you some examples here that you can also go through. So maybe let's pick one or two, and then we can see if we are on the same page, right? So let's say okay, labor is very tricky. Let me explain this thing here. Labor is very, very tricky, especially when it comes to variable and fixed costs. Labor is a very tricky thing. The assumption that we usually make is that if someone is working on the factory line, they work per hour, they get their salary per hour. If someone is working on the assembly line, or if someone is working directly in the manufacturing of something, they are working on an hourly basis. They get their salary per hour. So you can see where I said labor on the Fanta assembly line. That becomes a variable cost. But the person there, the factory manager, is different. Because the factory manager might not work on a what? On an hourly basis. He might be getting a salary, fixed salary every month. He negotiated his salary, he's getting maybe 50,000 rand each and every month, which means that his salary is fixed. Regardless of whether they produce 1,000 bottles or 1.5 bottles, his salary is fixed. Whereas the direct labor, the labor of the factory worker, will depend on the number of hours worked in the factory. Hence, it becomes what? It becomes variable. So that's something that you need to be quite aware of. That's something that you need to be quite aware of, right? Then I have got a question. What do you think of sales commission? Commission paid to sales representative. Do you think that is a variable cost or a fixed cost? Do you think that is a variable cost or a fixed cost? Sales commission. Commission sold for salespeople. Zaki says that is a variable cost. That is very, very correct. Because sales commission is based on the number of items that you have sold within the organization. If you sell 10 items, then you what? You get a commission for the 10 items. If you sell 0, you get nothing. So it becomes a variable cost. Okay. What do you think about insurance of the factory building? Insurance of the factory building. Do you think it is fixed or it is variable? A lot of you are saying that's going to be a fixed cost. So that's, again, very, very correct. Insurance is usually charged to just one single figure per year, and then you pay that as a what? As a fixed cost, right? So that's, again, a fixed cost. So there are some costs that I don't want to lie to you. You will need more information for you to be able to to provide an answer. But there are some costs that are very straightforward, right? But some costs you will need a little bit more information, right, for you to be able to provide an answer at the what at the end. Then some course, you never get questions that are too complicated, but you just need to be aware that some course you need a little bit of more information for you to actually come to a conclusion. Then no answer is really wrong. No answer is really wrong. You just have to support your theory. You just have to support what you're talking about. I remember last year, we had an argument in terms of communication expenses. We had an argument in terms of communication expenses, where some were highlighting that communication expenses is fixed, and some were highlighting communication expenses is variable. All right. Those that were highlighting that it was variable were saying that communication expenses can be tied, for example, to sales. Right. So the more the sales people are working, the more the sales we make, the more the variable the expense becomes. And then some were saying it's fixed because, companies get into contracts where they can pay fixed internet fees, pay annum, and those sort of things. So some of these things you just have to provide a rationale behind it. There's really no wrong or correct answer. I just want you to understand the background of what you're talking about. So that's our behavior, fixed and variable costs. You can go through the rest of them in your spare time and see what you can arrive at. That. Now let's talk about direct versus indirect. Sorry, this one we did. Okay, manufacturing. Manufacturing versus non-manufacturing costs. So manufacturing, so this is by location. You can ignore it says direct on top there. It's just an error, right? It's manufacturing versus non-manufacturing costs. You're looking at your costs by location. So again, when I look at cost by location, I'm saying, is the cost part of the factory costs, the manufacturing part of the organization, or is it part of the sales and marketing and administrative cost part of the organization? So this one is very straightforward. If the cost has something to do with manufacturing, then it goes under manufacturing costs. If it is labor in the factory, manufacturing costs. If it is salary of the supervisor or of the cleaner or of the manager at the factory, it's part of what? Manufacturing costs. But if it is advertising costs, it goes to marketing costs. If it is vehicle expenses for the management of the organization as a whole, then it's part of administrative costs. Or if it's the salary of the general manager or of the finance manager, then it becomes part of the what? Part of the administrative cost. This one is very straightforward. I don't think you struggle with this one. You just have to identify whether something is part of manufacturing or not. If it's part of manufacturing, put it under manufacturing. Whether it's an overhead or it's a direct cost, it doesn't matter. It's manufacturing. And then if it's not part of manufacturing, if it's marketing or administrative, then it goes to marketing or administrative. Even if it's variable, it still goes to marketing or administrative at the end of the what? At the end of the day. That's wonderful. So I think we are done here. Let's see. Wonderful. Let's see if there's anything that is too critical. So again, there's a little homework. There are those costs that you can also classify under manufacturing and non-manufacturing non-manufacturing costs. So for example, depreciation of factory equipment, does it go under manufacturing or under non-manufacturing costs? Depreciation of factory equipment. What do you guys think? Depreciation of factory equipment. You are not sure. Let's see, all of you are quiet on this one. Yeah, this one was a little bit trickier. Okay, so here's the thing. If you are given depreciation in general, usually we consider it as an administrative cost. However, if the question specifies that the depreciation is for the factory, then it's actually considered under manufacturing costs. That's something that you need to be aware of. Normally, depreciation is considered an administrative expense, but the moment it is specified that this depreciation is for the factory equipment, you have to put it under the manufacturing costs because it relates to the manufacturing side of the organization. So, for example, even also insurance. If I say insurance for the factory, it's actually part of the manufacturing cost of the what? Of the organization. I know it's a bit hazy there, but it's something that I've noticed that examiners can also do that can very, very well confuse you. If they specify that it is for the factory, then it should fall under the manufacturing expenses because that's where it's related to at the end of the day. Right. I think we are done with our unit number 2. So we need to move to unit number 3. So then we are moving very fast there, but I will slow down when we get to certain things later on. We have to slow down because some of the things they'll be a little bit more complicated. Right. So now that you know the issue of the different costs, the types of the costs, whether they're direct, indirect, manufacturing, non-manufacturing, variable, or not variable. Now we want to go into the specific subheading. We want to talk about materials. We want to talk about labor. We want to talk about absorption costing and etc. all the other different units. So the next time we meet for management accounting, we are going to discuss material costs. Right? We're going to discuss material costs, where we are going to look at the economic order quantity, and we are going to look at the different methods of valuing materials, which is your FIFO, LIFO, and AFCO methods of valuing materials. So that's what we are going to look at. I'm not going to start the topic today, lest we are not able to finish it within this class. But in our next lecture, we are going to look at unit number 3. That will be our next target. All right. That will be our next target at the end of the day. Then someone wants me to go back a little bit. So like I said, manufacturing versus non-manufacturing expenses, right? Manufacturing expenses, we are saying that whether it's direct, indirect, or if it's an overhead, it doesn't matter as long as it is part of the manufacturing. So depreciation is an overhead, right? Depreciation is usually regarded as an overhead, right? But normally, if you're not told any information and you are just told depreciation, you consider it as administrative. But if you are told that this depreciation that we are talking about is depreciation for the plant that we are using to manufacture our products, it is a manufacturing cost because it's wear and tear on the plant that you are using to manufacture. So it is a manufacturing cost. If you are told that this insurance that we are talking about is insurance for the plant that we are using to manufacture, it is a manufacturing cost because it's directly related to the manufacturing activities of the organization at the end of the day. So you have to look at the terminology that has been used. If the terminology is direct to specify that this is insurance or this is a depreciation for the plant itself that is being used to manufacture, then it's a manufacturing cost. It's a manufacturing cost. That's what I was trying to highlight. So I'm gonna send you guys the link to the class that we just did today. And then just a reminder, like we highlighted last time, officially, those that want to join these paid classes, it will be 20 February. Hold on a second. Just give me a second. 20 February. All right, 19 February, so to say. It will be 19 February. That's when we are saying from the week 19 February going forward, we'll be doing paid classes only. We'll only be taking the students that have made their deposits. So we actually want to do the assignment for management accounting 22 February. That's when we want to do the assignment. I'm sure by then we would have covered a little bit of the material. So next week is going to be free, or the 15th is going to be free. So unit number 3, we'll do it together, it will be free. Unit number 4, we'll do it together, it will be free. But the one which is 22 February, please make sure that you have made your deposit by then. Make sure that you've made your deposit because we are going to be doing the assignment on the 22nd of February for management accounting. We're going to be doing the assignment 22 February for management accounting. We want to do it early. I know it's due in April, but I prefer that we do it early. We know that these things are covered because I have a lot of other students, other classes that I also need to attend to. Because once we have done with the assignment, then I'll give you guys time to write the assignment, attend the Mancosa webinars, and then we can come back together and do exam revision once that's done. So that's the reason why we've started a little bit early, so that we can cover a little ground, and then I'll give you space to breathe and attend the Mancosa lectures, and then you can come back again and do the exam preparation once that's done. So I believe I've done justice to this. Those that are joining for business law, we're starting at 8 o'clock for business law. Just joining again for business law at 8 o'clock if you're doing business law. If you're not doing business law, we'll see each other next week on Thursday. Any questions before we dismiss each other? Any questions? Okay, if there are no questions, thank you guys for coming in. Let's see each other in business law.